Bring in Bill Simon. He's the former president and CEO of Walmart U.S. And Bill, watching what's happened to Walmart over the years, and this is a company that continues to reinvent itself against some pretty strict odds. What do you think of what you've seen just over the last few years?
Yeah, I think they've done a terrific job, and Doug's a great interview. They've done a masterful job at laying out a strategy, telling a story, and then executing and delivering against it. And it's hard to argue with. They sort of declared where they were going to go 5 years ago, and they've gone there. And the question is, really, where do you go from here? They have built, as you mentioned in the interview, a really terrific e-commerce business from next to nothing. That has come at a really steep cost. 5 years ago, their operating income was about $28 billion, and now it's $21 billion. So that's down 23%. And over the same period, their sales have grown in total about 6%, a little over 1% a year. So it's time to start seeing some traction from that, as Doug started to describe in the interview. But they've done a really good job laying it out and really changing the direction and the impression that the company's been able to deliver across the country.
Bill, in responding to Becky's question about the impact of the tariff, he said, we have, quote, many variables to play with. What do you think those variables are? I mean, what have they done to minimize the impact of the tariffs?
Well, they have a lot of variables, and I think you're seeing the same result across retail today. We saw Target beat and Lowe's beat earnings, and there's not a whisper really of anything tariff related in there. The first thing, and this is why I think China will end up eventually coming to the table and having an agreement, is they're able to move sourcing from country to country based on, given enough time, and this has been going on 18 months plus now, they're able to move supply lines. They're also able to mitigate some of the costs by shifting the pressures, in some cases, on asking the suppliers to absorb some. And in Walmart's case, their breadth of assortment is so great that there may be a tariff on a particular item, and that is a price elastic item, and they can't take price there, but they can shift the pricing to another place in the store that doesn't have a tariff with less elastic pricing. So the overall scope and impact from a consumer perspective seems to be pretty nominal at this stage.
We talked a little bit with Doug just about what he would like to see next with e-commerce. He made the point himself on the conference call last week that they've done very well in terms of grocery. They still have a little more work to do, he thinks, when it comes to general merchandise. How would you go about targeting that?
Well, I think I would agree with them. Their competitive advantage is grocery, and it's going to be grocery because if you think about the supply chain logistics and infrastructure that's required to get bananas from Central America to every zip code in the country in a 10-day window between the time they're too green or too brown, it's really complicated and really complex, and it's going to be years and maybe decades before anybody else can match that. And so to build their non-grocery business, I think they have to do it on the back of the traffic that their grocery business will drive, and I think that's sort of where they're headed. And that would be what I would think they were going to be doing.
It's a little trickier. I mean, I was just at a Target store in Manhattan earlier this morning. They put the groceries downstairs all the way in the back because I think it's about 32% of the sales in that store. That way everybody has to walk through the store and see everything else. It's easy to do in a physical store. How do you do that online?
Well, I think what you do, and really the issue I think that Walmart's been trying to deal with is how do you take that grocery traffic and translate it to e-commerce? They've realized that the physical store is a really important component of it, and so most of the online grocery is order online and pick up in store. And so the key then is to try to get a transaction out of the customer while they're at the store to pick up, and they're going to have to sort of co-market it online. Just like you hang ice cream scoops next to the freezer section of ice cream, you're going to have to do the same thing online and sort of show people products that they might be able to order and pick up while they're picking up their groceries.
Great. Bill, thank you for your time today. It's good to see you.